So this is based on selling line items on Amazon's income statement. So we're gonna take the sum of those items that are subject to accounts payable. Amazon have payable terms on. So in this case, cost of sales, since we believe that Amazon will be purchasing goods and services inventory from its suppliers. So we believe that there's gonna be payable terms on that. We also include other line items such as fulfillment, the process of shipping those items. We believe that may meet payable terms on those. We also have here we can include general and administrative expenses. We can also include other operating expenses as a result. So we believe that these are the items that Amazon will have payable terms on. So we include all of those, and then we can multiply that by in the control panel the days outstanding for accounts payables, 85 days. Reference the cell with F4, we divide that by the days in the period, 365 days here. So we have that in place. For accrued expenses, all of these are going to be a function of revenue. So accrued expenses, we're going to focus that based on revenue. So we take the total net sales, reference that cell with F4 2 times, then we multiply that by, we go to the control panel where we have the accrued expenses and on-end revenue. We can reference that cell with F4 3 times. We can feed that by with Control D. So we can take all of these and fill to the end of the decade. So we have those in place. So we have now the total current assets, which is just the sum of all of those. We can fill that right to the end of the decade. So for the total term lease liabilities, so for the long-term lease liabilities, we're gonna have these numbers filling in when we are done with the finance leases and the operating leases. And also for the long-term debt, we're gonna be having a number when we are done with our long-term debt schedule. And then here for other long-term liabilities, gonna be equal to the prior period. So this is just gonna remain flat. And we can fill right the total liabilities formula. We can take all of these and fill it to the end of the decade. So we have that in place now. So what we have done so far here is that we have been able to model this up to this point, and we are left with the shareholders' equity. So for all of these other items, we gotta be doing this later on when we are done with our supporting schedules. So for now, we can fill the total stock holders equities formula and the total liabilities and shareholders equity formula right to the end of the projected period. So we have that in place there. So for now, the balance sheet will not balance because we have all of these other items which we have to fill up when we are done with other parts of this model, such as the supporting schedules and the cash flow statement. So to begin with the projections of the cash flow statement, we're going to reference to net income. So net income from the income statement, we have that number there for now. And then depreciation, this is going to come from our supporting schedules, from the property, plant and equipment, and also the right of use of assets for the finance leases. And then for stock-based compensation, it's going to be equal to, we take all of the items on Amazon's operating expenses, the sum of all of the items excluding cost of sales. So we're gonna take fulfillment, so we are summing all of the items on Amazon's operating expenses that we believe it's gonna be a function of the stock-based compensation. So we have marketing, we have technology and content,